Good evening, I'm Daniel Carter. Our top story tonight, the ripple effect of the recent economic shifts is being felt across the globe.
If global investors stop buying US debt, borrowing costs will surge and economic stability could collapse.
The United States now owes over $33 trillion, raising serious questions about long-term stability. Even a small rise in interest rates could cost the U.S. hundreds of billions every year.
China has sold hundreds of billions in US bonds, signaling declining confidence.
A weaker dollar could make everyday goods more expensive for millions of Americans.
Even America's closest allies are reducing their US bond holdings, signaling growing concern.
The U.S. now spends more on debt interest than on its military, an unprecedented shift.
As the dollar weakens, imports become more expensive and inflation spreads. Venezuela's collapse shows what happens when trust in debt disappears. A U.S. debt crisis would not stay in America. It would shake the entire global economy. For decades, the U.S. dollar has been the backbone of global finance and trade. When trust in the dollar fades, the entire financial system begins to crack.
China is aggressively pushing the yuan as an alternative to the dollar.
Nations are hedging their risk by turning to gold, euros, and digital currencies.
Senators are faced with an impossible choice: enact immediate spending cuts and risk a recession, or continue the massive influx.
Cutting government spending is economically necessary, but politically toxic.
Printing money may seem like an easy fix, but it risks destroying trust in the dollar.
America's debt is no longer just economic, it's a strategic vulnerability.
Critical minerals essential to defense and tech are largely controlled by China.
Rebuilding domestic supply chains could be America's path to recovery and resilience.
Every year of inaction pushes America closer to a financial breaking point. Rising debt and inflation hit families, workers, and retirees the hardest.
Politicians avoid hard choices, leaving future generations to pay the price.
Markets are reacting to uncertainty with growing fear and volatility.
The world is slowly preparing for a future where U.S. financial dominance is no longer guaranteed.
Restoring fiscal discipline may be painful, but it is essential for long-term stability.
The Federal Reserve must balance inflation control with economic growth. Global cooperation could help prevent a financial crisis from spiraling out of control. Decisive action now could prevent a crisis later.
The dollar's future will be decided by the choices made today.
Today's debt will shape the opportunities available to the next generation.
A credit downgrade would raise borrowing costs and shake global confidence.
A weaker dollar reshapes global trade, raising costs at home and altering exports abroad.
When trust in institutions erodes, financial systems become fragile.
This moment will define how history remembers America's economic leadership.
Debt rarely explodes overnight, but it quietly erodes stability until it's too late.
What begins on Wall Street eventually reaches every home in America.
I just don't know how we're going to pay all of these.
We'll figure it out somehow.
A clear reform roadmap could restore confidence and prevent collapse.
As we look at the latest global debt models, the contrast between stable green indicators and these flashing red warnings becomes stark.
America now stands at a crossroads between crisis and recovery.
Markets run on confidence, and when it breaks, panic spreads fast.
As prices rise, every dollar buys less, squeezing households nationwide.
America's debt is sustained by foreign creditors watching closely. What happens next will define America's place in the world economy.
Resilience begins at home with strong industry and smart investment.
Warning signs are flashing across markets, signaling growing debt stress.
The bond market is where confidence in U.S. debt is tested daily.
This is a developing emergency. The circuit breakers have been triggered, halting all trade as we witness an unprecedented market freefall.
Moments of crisis reveal the strength or weakness of leadership.
The storm isn't over yet, and the hardest decisions still lie ahead. As we track these spreading stress points across the global financial network, the systemic risk becomes clear. As bond values fall, banks face increasing pressure on their balance sheets. As uncertainty grows, consumers spend less, slowing the entire economy. In moments of crisis, governments must act fast, often with imperfect choices.
As America struggles with debt, the world adjusts its plans and expectations.
As this map clearly illustrates, the process of de-dollarization is accelerating. Nations are actively seeking.
Gold remains a trusted hedge when faith in currencies begins to weaken.
Digital currencies could reshape global finance faster than anyone expects.
Economic influence is slowly shifting away from the old centers of power.
This historical transition marks a new era for the global financial system, bringing with it new rules and new centers of power.
What began as a domestic issue is now spilling across borders and markets.
When trust fades, even strong systems begin to weaken.
Insurers depend on safe returns, and debt instability threatens their models.
The system is failing. We are reaching the point of no return much faster than anticipated. Billions are being wiped out globally.
Pension funds rely on stable bonds, and rising risk threatens retirement security.
When liquidity disappears, even healthy markets can seize up.
The banking sector is pulling back on lending, creating a significant credit crunch for consumers and businesses alike.
As credit dries up, companies cut back, and jobs are lost.
All pressures converge as the system faces its greatest test.
When the system nears collapse, emergency tools are activated without delay.
We are seeing early signs of stabilization across the board. Volatility has dropped significantly, and the charts are beginning to flatten out as we expected.
After the storm, leaders must answer for the choices that led here. The debate centers on building a more resilient system. As we look at these blueprints, several paths emerge.
From crisis comes change, and a new financial order begins to emerge.
Recovery takes time, patience, and difficult rebuilding decisions. Beyond markets and numbers, societies must heal from economic trauma.
A stronger future depends on the reforms we commit to today.
Every crisis leaves lessons, but only if we choose to remember them. The true cost of debt is measured in the future we leave our children. After the storm, nations pause to reflect on the choices that shape their path. The lessons of crisis must be taught so mistakes are not repeated.
True recovery requires rewriting the rules that failed in the first place.
The future depends on cooperation, not competition, between nations.
Every crisis creates space for new voices and new ideas to lead forward.
The crisis changes not just systems, but how people think about money itself.
What matters now is not the crisis we survived, but the future we design.
The system bent under pressure, but it did not break.
Every era ends, not with a crash, but with a quiet realization of change. After chaos fades, silence forces the world to reflect on what remains. Behind every chart were lives changed, plans broken, and futures delayed.
The greatest failure would be forgetting how close the world came to collapse.
The future remains unwritten, shaped by the decisions we make next. History closes one chapter, but the next is already being written. When the noise fades, only the lessons remain to guide the future.
Sustainable futures are built on responsibility, not excess.
Our legacy is not what we endured, but what we changed. From collapse grows renewal, stronger and wiser than before. The future is not promised. It is earned by the choices we make today.